In today's video, we're diving into part 1 of the 10 golden rules to master credit cards, your go-to framework for managing credit cards responsibly. These rules provide practical steps to help you avoid overspending, escape debt traps, and safeguard your credit score. In this episode, we'll focus on the first 5 rules every cardholder should know to maximize benefits and prevent common pitfalls. Stick with me till the end. This is advice you won't want to miss. In this channel, we'll break down everything you need to know about credit card success made easy, one lesson at a time. Rule number 1. Your credit limit is not additional money. Let's be clear, your credit limit isn't spare cash in your pocket. Every time you use your credit card, you're borrowing money from a card issuer that you'll need to repay. Many people mistakenly believe their credit card increases their spending power. Let me illustrate why this mindset can be dangerous with a simple example. Imagine your monthly income is $5,000 and your credit card has a $2,000 limit. If you spend that entire $2,000 on your card in a given month, you haven't increased your spending power to $7,000. Instead, you've actually reduced your available funds for the month to $3,000 because you are required to pay your statement balance later, and you need to allocate money for it. Using your credit card for planned and budgeted expenses demonstrates responsible credit card management. However, significant problems arise when unplanned purchases exceed your income, leaving you unable to pay your balance in full when it's due. This often leads to reliance on minimum payments or partial amounts, which can create long-term financial challenges due to compounding interest rates. Keep this essential principle in mind. Every dollar you spend on your credit card is subtracted from your income, never added to it. Adopting this mindset will completely transform your relationship with credit cards. Rule number 2. Avoid interest charges by paying the statement balance every month. One of the biggest advantages of credit cards is the interest-free grace period, but only if you pay your statement balance in full every month. When your billing cycle ends, you receive a statement showing 3 key numbers. The statement balance, the total amount you owe for that billing cycle, the minimum payment, the smallest amount you can pay to keep your account in good standing, and the payment due date, the deadline to make a payment. Here's what happens when you pay the full statement balance. You incur 0 interest charges. You maintain your interest-free grace period for new purchases. And you avoid accumulating debt. But what happens if you pay only the minimum or partial payment? 2 significant consequences. You lose your interest-free grace period and begin accruing interest not only on the remaining balance, but also on any new purchases you make, which will immediately add to the daily interest calculation. Unsettling, isn't it? Credit card interest rates typically range from 15% to 28% or higher, rates that can quickly transform manageable balances into serious debt problems. This compounding effect explains why so many people find themselves trapped in credit card debt. The best approach? Always pay your statement balance in full. If you find yourself unable to do this, it's a clear sign that you're spending beyond your means and need to reassess your financial discipline immediately. Rule number 3. Pay your credit card on time. Paying your credit card on time is non-negotiable. Why? Because even one late payment can trigger a cascade of costly consequences. First, you'll incur late fees, typically ranging from $25 to $40 per occurrence. While this might not seem catastrophic as a one-time charge, repeated late payments can cost you a few $100s annually. Second, you will lose the grace period, resulting in immediate interest charges on both your remaining balance and any new purchases you make. Third, Many credit card issuers impose penalty APRs for late payments, which can significantly impact those who miss a payment and carry a balance. Fourth, failing to make a payment while on a promotional APR may result in the rate reverting to the standard APR, leading to higher costs. Fifth, and perhaps most damaging, late payments hurt your credit score. Since payment history accounts for 35% of your FICO score, even a single 30-day late payment can drop your score by 50 to 100 points. A lower credit score makes it harder to qualify for mortgages, auto loans, or rental housing, and results in higher interest rates when you do get approved, potentially costing you more over time. A common mistake people make is missing credit card payments, either due to forgetting or lacking the necessary funds. Forgetfulness can be resolved by setting calendar reminders, while financial shortfalls involve reassessing spending habits and strengthening financial discipline. Rule number 4. Spend within your means. The fundamental principle of responsible credit card use is spending within your means, which translates to using your card only for expenses that you've already budgeted for and can fully pay off each month. Credit cards make overspending remarkably easy for those who lack financial discipline. You simply swipe or tap, and the purchase is yours, without ever seeing actual money leave your possession. This psychological disconnect from your money can lead to lavish spending behaviors. Here are 3 practical strategies to help you spend within your means. First, as the old adage says, avoid keeping up with the Joneses. In today's social media-driven world, it's tempting to compare your lifestyle to others and spend accordingly. Remember that many people finance their lifestyles with debt, creating an illusion of wealth. Focus on your own financial goals rather than external appearances. Second, create and stick to a monthly budget that accounts for all your expenses: housing, utilities, transportation, groceries, healthcare, clothing, entertainment, savings, and the list goes on. Track every credit card purchase against this budget to ensure you stay within your limits. Otherwise, you lose sight of where your money goes, which can easily lead to overspending. Third, always leave room in your budget for emergencies. Building an emergency fund is essential to prepare for unexpected situations. Without this buffer, unforeseen expenses often become debt that's difficult to eliminate. The most common mistake I see is people using credit cards to maintain a lifestyle they can't truly afford. This often stems from not understanding rules number 1 and 4, combined with insufficient financial discipline. When spending issues aren't addressed properly, continuing to use credit cards only magnifies the problem. Rule number 5. Review your credit card statements. Many people glance at their total balance and due date while ignoring the detailed transactions in their statements. This oversight can cost you money and expose you to fraud. Reviewing your statement carefully helps you catch 2 important issues. First, billing errors happen more often than you might think. Look for duplicate charges, missing credits for returned items, incorrectly applied fees, subscription services you've canceled but are still being charged for, and other mistaken charges. Catching these errors early means easier resolution and money back in your pocket. Second, statement review is your first line of defense against fraud. Credit card theft doesn't always appear as large, obvious charges. Fraudsters often test stolen card numbers with small purchases first, which can easily go unnoticed if you're not reviewing your statements line by line. Even charges of just a few dollars could indicate that your card information has been compromised. If you spot any suspicious activity, contact your card issuer immediately. The best part? Credit cards have zero liability protection for fraud, but you need to report problems promptly. Alongside monthly statement reviews, I recommend checking your credit report at least once a year through annualcreditreport.com or one of the 3 major credit bureaus to ensure no unauthorized accounts have been opened in your name. This simple habit takes just minutes and can help catch potential fraud early, preventing it from escalating into serious financial or legal issues. Well, we've just covered the first 5 golden rules for responsible credit card use. Following these guidelines will help you enjoy the many benefits of credit cards: convenience, rewards, credit building, and more, while avoiding the pitfalls that lead many people into financial stress. In our next video, we'll cover 5 more golden rules for responsible credit card use to help you master these powerful financial tools. If you found this information helpful, explore the videos below to continue your journey toward credit card mastery. Don't miss out. Remember to hit the like button and subscribe to our channel so you stay updated on the latest tips and insights. We'd love to hear your experiences with credit cards. Share your story in the comments below. Thank you for watching.